Welcome Accounting Boffins, you with Ashraf Patel and the crew. And guys, we're busy with fixed assets, how it impacts with regards to asset disposal, the note number 3, and all the relevant internal control ethical questions. So when you're looking at a question on fixed assets, take into account these are all the possible types of exam questions you could face in the exams and you could be exposed to when you are writing some kind of assessment. Okay, so if we're looking at fixed assets, again, remember a quick recap or a mind map so that we set the tone for the lesson. Remember the methods of depreciation that we use. You have two types of depreciation, two methods of depreciation. One is where we're using the cost price, and the other one is where we're using the carrying value to record the two methods of depreciation. Right. Then we also know that our asset disposal account is an interim nominal account. It serves a particular purpose. Once it has achieved that objective, then it self-destructs. In other words, it closes by itself. You'll notice the debit side will be equal to the credit side, and therefore you will then have that account serving its purpose to determine what do we want from the asset disposal account. One or two the possibilities are: one, either a profit on sale of asset, or two, a loss on sale of asset. Okay, what do we remember? That if our selling price, let's write this down, if our selling price is greater than our carrying value, we're going to get a profit. That's right. And if our selling price is less than our carrying value, we're going to get a loss. Okay. Let's go into the next question. It tells us here, information. You are provided with information from the books of Ash Traders. You are expected to prepare the asset disposal account, calculate the depreciation for the year, prepare the note to the financial statement on the 28th of February 2019 for fixed assets. They're telling you that a total column is not required. Okay. We start off by looking at the information that we have here. These are our balances at the end of the year. Very, very, very important. Notice it says here, at cost on the 28th of February 2019. And this obviously means that your year started on the 1st of March 2019 and ends on the 28th of February 20, have I got that right? Sorry. It's 1st of March 2018, ending on the 28th of February 2019. Okay, that's my financial year. It's important, guys, very important, to establish what's the financial year you're working with. Clearly you can see here, if you know your year started in March of 2018 and ended February 2019. So that's the financial year that you're working for. Those dates are important because obviously it's going to impact on your calculations. Right, what else do we know? We know that these balances for accumulated depreciations will be your balances at the beginning of the year. As you can see, 1st of March 2018. Right, moving further, we are told on the 1st of February 2019, JJ Construction was paid 37,000 Rand for what? We were paid for repairs to the floor and the building of a new storeroom. The total amount has been debited to land and buildings. Keep that in mind because obviously it's going to impact when I'm doing my calculation. New equipment costing 40,000 was bought on the 30th of November. This has been properly recorded. Equipment is depreciated at 10% per annum on the diminishing balance method. Right, a quick one here. When we're looking at the two methods of depreciation, one is your cost price method, where you calculated your depreciation on the cost price of an asset, and the second one is your diminishing balance method, where you calculate your depreciation on the carrying value. And how do we get the carrying value? Cost price minus accumulated depreciation will give you carrying value. Okay. Then we are told that an old vehicle was traded in on the 1st of January 2019. The cost price of this vehicle was 120,000. The accumulated depreciation was 84,000. Depreciation is calculated at 20% per annum on cost. The trade-in offered by Wise Motors was 13,500, and the cost of the new vehicle bought was 261,000. No entry has been made for these transactions. In other words, they're telling you that none of these entries were recorded. Okay, keep that in mind, very important. So let's start with the depreciation on the vehicle that we traded in. Step number one, we're calculating now the depreciation on the sold vehicle or the traded in vehicle. Take your cost price, which is, they told you here, 120,000. Therefore, you take 120,000 as your A, right? Your rate is 20%, 20 over 100, times your time. Now, this is important. When did the trade-in take place? The trade-in took place on the 1st of January, meaning you have used this vehicle for March, April, May, June, July, August, September, October, November, and December. That will give you a total of 10 months. Clear? That's very important, because if you get that part wrong, your calculation is going to be wrong. Okay? So this means, therefore, that if you look at your calculation there, you can see times 10 divided by 12. Remember the T part of our art? There we go. We've got the amount, we've got our rate, and we've got our time. Let's do that calculation. So we got 120,000 times 20% times 10 divided by 12. And this will give you a figure of 20,000 Rand. So what is this 20,000 Rand? This is what we call our pro rata depreciation. Okay? This is the depreciation on the asset that we are disposing of, but for this year, how much of the vehicle did we use? We used it for 10 months, and the pro rata depreciation on that 10 months amounted to 20,000 Rand. So therefore, step number one, remember I said, and I'm nagging now, because I want you to please make sure, whenever you're doing a question on asset disposal, to draw up the table. This table for asset disposal is of extreme importance. As you will see, and as you have seen already, that once you have the information in here, it makes your task much, much, much easier. Okay, so that one is done. The depreciation entry is, the depreciation amount is calculated to be 20,000 Rand. What else do we know? We know that the cost price of this vehicle was 120,000. Okay, so here we go. The cost price was 120,000 Rand. Let's bring in the cost price. Here we go. Cost price 120,000 Rand. What else do we know? We are told that the depreciation, the accumulated depreciation rather, on the 1st of March was 84,000 Rand. Remember, that is your balance at the beginning of the year. That means, what was the depreciation on this vehicle that I disposed of at the beginning of my financial year? It was an amount of 84,000 Rand. Therefore, in my table, I start off with the 84,000 Rand. Always start off with the balance at the beginning of the year. Right, now what do? Add my current depreciation. What would I do here? I say plus the 20,000. Where does it come from? From my calculation. I've already calculated that 20,000. That means for this financial year, from March until when I dispose of the asset, that depreciation worked out to 20,000 Rand. Add the two together will now give you your total accumulated depreciation of 104,000 Rand. So it's your opening balance plus the current depreciation will give you your total accumulated depreciation, in this case here, 104,000 Rand. Okay, next step. What do I now do? I now calculate my carrying value. What is my carrying value? It is my cost price minus the accumulated depreciation. So 120 minus 104,000 will give me a value of 16,000 Rand. That is the carrying value. Now, very important, keep this in mind. In fact, when you're doing this, put a big 3 there to tell you you're going to use that figure when you come to note number 3. Okay, so now I bring in my selling price. I'm told that, let me get the information there. The trade-in value was offered by Wise Motors was 13,500. So they offered us an amount of 13,500 as our trade-in. So that is my selling price of 13,500. The next thing that you ask yourself, come on guys, you should be shouting out the answer. What do? Compare my selling price with my carrying value. Yes, let's do that. My selling price is 13,500, so there we go, selling price. Is it greater or less than my carrying value? My selling price is less than my carrying value, which was, in this case here, let's put the figures down. You can see your 13,500 is less than your 16,000, which is your carrying value. Okay, so this means therefore you've made a loss of 2,500. Okay, so without making a single accounting entry, you've already ascertained that on this particular transaction, you've made a loss of 2,500 by comparing your selling price with your carrying value. Okay, now we go into the account. Step number 1, transfer your cost price. Debit asset disposal, credit vehicles. There we go. There's my 120,000. Now relate it to your table, guys. Use the information from your table. Here you can see there's your entry, debit asset disposal, credit the vehicles account. Number 2, what do we have to do with the depreciation? Debit depreciation, credit accumulated depreciation. Now watch this. Very, very, very important. When you are showing your asset disposal account, right? Start off with your accumulated depreciation. Obviously, your contra entry is debit accumulated depreciation, credit my asset disposal. Therefore, in my asset disposal, watch, 84,000 was the first figure in my table, plus the 20,000 to give me a total of 104,000. It's not new. You've calculated it. There it is. And the layout here also helps you when it comes to your asset disposal account. Your contra entry, once again, debit accumulated depreciation, credit your asset disposal. Okay, step number 3, the carrying value. What do I do with it? Does it impact on my ledger account? No, it does not. But it will impact on note number 3. So what was my, so that one I know it's going to go to note number 3. I come to my selling price of 13,500. How was the asset sold? It was traded in. Come on, we've done this. We should know the answer. Yes, it is. Creditors control. It means a debit to creditors control and a credit to asset disposal, 13,500. And here you see you have a loss on sale of asset of 2,500. What did we say? That your asset disposal account is an interim nominal account. It serves a purpose. Has it served our purpose? Certainly it has. What have we ascertained? We've ascertained that there is a loss on sale of asset of 2,500. Notice that adds up to 120,000, and if you add that up, it gives you 120,000 Rand. Okay, guys, what have we done in this segment? We've done the asset disposal account. And now we're going to do all the calculations necessary to complete note number 3. You want to know more? Stay with us. See you just now.